What's up everybody? Welcome to the Stocks channel. Today the market started to pull back, but the bulls showed up at very important support. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was down 0.36% and we did get an inside day, which essentially means today's candle is completely inside the body of Friday's candle. And when you get an inside day, it does mean you want to pay very close attention to the high of the candle and the low of the candle, which means we're going to have a significant breakout in SPY below 490 and then just above 494. The bulls will want to push above 494 to start higher towards that price target above 501. And if you look at that move from today's close, that's not even a 2% move to the upside. So if you think that's a large move, by percent move, it is not even a 2% move. And it is completely possible that we do continue to push higher. Now the bears will want to break down below the low of the candle, below 490, and then try to push down towards this gap fill at the rising 20 daily moving average at 483. So moving forward, we need to see what side of that candle we break, but keep in mind the bulls have the advantage of the trend, which you can see with the price action above all of the positively sloping moving averages, which means there's a better chance or better probability that the bulls are going to win, which means if you're going to pick a side and you're going to risk money, you're going to have a better percent chance to win a trade if you're a bull trying to push higher towards 500. Again, these are probabilities, there's no guarantees, and just because the bulls have the advantage doesn't mean they will win, it just means they have a better chance to win. So that's what I mean when I tell you the trend is your friend. It means you want to trade in the direction of the trend to have a better probability chance of winning your trade. That means you need to have no bias, because if you're currently bear bias, that means you're not going to place long trades because you don't think it's in your DNA to buy up here at brand new all-time highs. But as a disciplined and profitable trader, you're going to have to learn to look the other way and follow the chart and not any bias that you have from either yourself or somebody else's opinion. So whether or not you think SPY should go higher, whether or not you think SPY is too overvalued and shouldn't go higher is completely irrelevant. The market's going to do whatever it wants. So on that break above 494, that will be the buy signal that we're going higher towards 500, and then below 490 we're going to have to get a lot more risk off, and I did say last night to also get risk off if we start to close below 491. Remember, closing prices are what matter. Intraday we were below 491, but you don't want to just give up on a trade on an intraday move, because you need to give your trade some wiggle room. If we're going all the way up to 500, you don't want to get stop loss just below a support zone if it was just a liquidity grab before we go higher. So anytime you structure your trades, you need to know where your risk is, and that's why I have a video about how to set up a trade with proper risk management. So be sure, if you still don't understand how to trade around these levels, that you watch that risk management video. And there is a link to that video in the description of every single update that I make. So significant levels will be the bull breakout above 494 or the bear breakdown below 490. No bias. We're going to let the price action do all the talking. On the NASDAQ 100 triple Qs, we were down 0.13% today, and we're closing right on this very important level at 428, which is a bull breakout that could push us into the 430s. And I have all of the price targets listed above at 432, right around 435, and then 437. There's also the chance we push straight to 440, but again, it is going to depend on the bulls holding above this breakout at 428. Again, this is another inside day candle where we did close within the price action of Fridays. So if we get the bear breakdown, it's going to be the break below 425, and the bull breakout is going to be the break just above 429.6. So the bulls need to continue pushing to get to the higher targets, and it looks like they have the odds in their favor with the very powerful bull trend and the price action above all of the positively sloping moving averages. If we start to break down below support, we have a gap fill at 422 and a gap fill below 414. On the Dow Jones, we were down 0.73% today, and we did close down below the 5 EMA, which means we could come back down and test this support zone right around 381. Above 381, the bulls are still in control, and if we break 381, we have the critical support down here at 377. So if you're bullish in the Dow, you can manage risk from either of those levels because they are both very valid. And if at any point the bulls lose that support at 377, we're going to have to look at the possibility that a correction is coming. And if we measure from today's close down to 377, that is not even a 2% drop, which is a completely normal pullback, which means even if we go to that support, we could still bounce and continue higher. So manage your risk at 381 and 377, and if we continue higher and we break that resistance above 386, then we're going to the price target at 391. On the Russell 2000 IWM ETF, we were down 1.27% today, and we are still testing and holding this support zone right around 191, which is the 50 EMA. And you can see if we go too much lower and we break that low at 188, then we are going to have a lower high, lower low breakdown, which means we could be going down here towards 179 to 180. But right now, the bulls have the advantage as long as we're above 188 and this support zone right around 190 to 191. And if the bulls can push higher and break through some of this resistance above at 196 and above 199, I am expecting a push to a brand new higher high right around 207 to 214. So manage a risk at this support or wait for the bull breakout. It doesn't matter. Either one is an acceptable trade, but you do have a lower risk if you buy closer to support. On the ARKK ETF, we were down 3.13% today, and that does confirm this is looking like a double top rejection from 48 now that we are breaking down below the neckline at 45.7. So that does mean ARKK could go for a full measured move for the double top and bring us down here towards this support zone between 42.4 and the rising 200 daily moving average right around 43. So it is possible ARKK is going lower because of the bearish double top rejection below the neckline. And if the bulls want to take over control, they are going to need to bounce all the way back above that resistance at 48, and then we can say this is looking more bullish and that we could start pushing towards the 50s. On the VIX, we were down 1.16% today, and the VIX is still in this very low fear environment where the VIX is staying below 15, which is more indicative of the bull trend that we're going to continue to push higher. And it's only if we see the VIX spiking out above 15 and then getting out here above 18 that we're going to be looking for a deeper correction. On Bitcoin, we're currently down 0.62%, and Bitcoin does look like it's coming back to test this support at the breakout, which is right around 42,000. And I told you it's going to be easier to stay bullish above 42,000 because it's possible this is a bull breakout and we're getting ready to run higher towards 50,000. However, if we break down below 42,000, I would get risk off because there's still the chance we're coming down here to tag this price target at 38,000. On Nvidia stock, we were up 4.79% today, and I did say above the breakout at 633, I thought we would go straight to 670, and today we gapped up above 670 and got near that price target up there right around 703. Now you can see we are outside the upper Bollinger Band, so this is still a very bullish stock, and it is squeezing out a lot of the bears that are trying to call a top. So I will remind you one more time, this is not a stock that is worth shorting because it is in a very powerful bull trend, and it is continuing to push higher. Remember, I've been warning not to short this stock ever since we had the bull breakout above 504, and look how far it has ran since. Now, we did open a gap down here right around 664, so if we do start to pull back, that is going to be a potential support zone before we continue to push higher. And because we don't have earnings for a few more weeks, it is possible we do continue to push higher. Also, pay attention to the volume because today we did go higher on increasing volume, so it's very difficult to say that this bull run is over. So don't bother trying to call a top, let it run, and if you're scared of this stock, just sit on the sidelines and go trade something else. On Tesla stock, we were down 3.65%, and we are getting very close to my price target down here in the 170s, and I do believe that is going to be a potential buying opportunity, even though it will feel like we're buying a falling knife. This is going to be a low-risk entry between 167 and 173. Now, if at any point we break back over the 5 EMA or above the resistance at 197, then you can instantly start to get more bullish, even if we don't go down here and hit the price target because the price action is telling us we're starting to bounce. Right now, this is still a falling knife downtrend, and I do think we could still go a bit lower. On Apple stock, we were up 0.98% today, and we closed the gap yesterday, and today we did hit this bunched up resistance zone where all of these moving averages are starting to accumulate between 188 and 189, and that was also a previous support, so this is going to be a strong resistance zone, which is obviously going to mean it is bullish if we break through it and we start to close above 190. If we close above 190, then it's possible we push to the top of the range right around 195 to 198, and then above 198, we have a brand new all-time high and we could start pushing towards 204. The bear breakdown will be a close below 182, and if we do get the bear breakdown, that means we're likely going down towards 177 to 174. So jumping back over the S&P 500, we still have a bull trend with price action above all the moving averages, so the odds are in the bull's favor that we are going to continue to push to brand new all-time highs and hit those higher price targets. Remember, there's no guarantees. We're playing the odds and we're following the chart, and the chart is still telling us to stay bullish while we're above these support breakouts. So let the price action do all the talking, have no bias, and always manage your risk around these critical levels. It shouldn't matter whether you prefer to go long or short. As long as you're managing risk, you can continue to trade and you can continue to be profitable. The moment you give up on risk management and let your losses erase all of your hard work and profits, then you are going to start eroding your profits and you're not going to remain profitable. So it's very important to stay disciplined and have a trade plan. And remember, I always suggest you're prepared for either scenario, which means don't just assume we have to go higher or lower. Know both of the scenarios and have a trade plan that's ready for either of them. Follow these rules and practice these rules because everything takes practice before it's going to start making more sense and before you're going to start seeing profitability. So start small and manage that risk. If you want to come crush the market, you can consider joining Bank Trade Alerts, where I'll send you all of your buy and sell alerts directly via email and text message. And it is very simple to follow because we only trade 2 ETFs, which is the TQQQ and the SQQQ. You can find out how to join Bank Trade Alerts by clicking on the link in the description of this video. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stocks Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.